The other thing is insurance is something that all of us will not end up, should be paying, but shouldn't want to claim. Because if you're going to claim, that means something's happened to us, right? So it's one of those weird products that are not that great at all. And, it's sort of picked up again. And, we can find a way to lend to that. But when we ask the question, hey, what happened in that year? And there was some sort of scenario behind it where the advice around, okay, spending that much on income, what are the ways that we can, get some tax money back as well at the end of the year? So yeah, I'm a big believer in that income protection space.
Okay, definitely the area of a financial advisor.
Yep.
In terms of tax returns, this is actually one of the first things I look at. Hi everyone, I hope everyone who is tuning in is well. I am Mina Baselyous from Pinnacle Accounting and Advisory, and today I've got the great pleasure of having Mr. Anthony Wick with me. Anthony, introduce yourself and tell us a little bit about your background.
Yeah, so Mina, before I did 4 series of John Wick. No, nothing to do with John Wick, by the way. Hi guys, I'm really excited to be here today, and Mina, thank you so much for the invite. Look, I've been in the broker space, finance space for about 20 years. Firstly, in the lending space, so helping customers get funding for property as well as business and commercial. And then I moved into the aggregation space. What that means is basically helping brokers start up a broker firm, continue, or if they already have a broker firm, helping them manage it and grow it with multiple staff and, I guess, growing the business in general. And now, over the last sort of 12 to 18 months, I've been in the insurance space, because what I found was that we're putting so many customers, or getting so many customers into wealth creation. We need to help them with the wealth protection as well. So today, it's not about who I work for. It's not about talking about who I work for. It's about helping everybody that's online understanding the value of understanding the risk when we're talking about debt as well.
Yeah,
So I'm
so
really excited. Thanks, Mina.
fantastic pleasure to have you with us. So overall, we're talking about insurance and how insurance can protect, I guess, the person and businesses. Yes?
Yes, so look, in Australia, there is a very high number of under-insured consumers out there, because in general, if we look at every mum and dad in the consumer world, they just assume that because they've got something in their super, that's enough. That's a starting point, right? It's a great thing, by the way. The government has done a fantastic thing by, helping every consumer out there, everyone that's over 18 that's working, have some sort of super when they start working because of the employee contributions. So it's great, but it also puts some, I guess the customers don't really understand what's inside of that. So they just assume that, oh, if something happens to me, I'll be covered for my super insurance. Yeah.
Yep. Now, before we go any further, we need to preface this. This is general advice only. It's not even advice, okay? So we're just talking about things based on our experiences, okay? You need to get your own advice tailored for your specific situation and your circumstances. Anything else, you're just winging it and you're opening yourself up to some potential damage, okay? So let's be very clear about that. Now, we keep going, good sir. Sir, can you tell me maybe some stories based on your experience that you've come across where insurance has kicked in and where insurance hasn't kicked in? And what were the benefits and the repercussions?
Yeah, look, there's so many stories in this space. I mean, if we look at everyday places that we live in to start off with, our homes, right? You see cases where people have had their houses burnt down and things like that, where the insurance is kicked in. Look, back in the day in my lending space, there were scenarios where there's been bushfires and things like that, right? And there's been cases where the insurance companies have kicked in and helped those consumers get back on their feet. Then we get more personal, where people have unfortunately, had everything's going great, their early 30s, married with a couple of kids, and when they don't expect anything to go wrong, something's gone wrong, and one person's got cancer or heart attacks or have a car crash or something like that, and all of a sudden now they've got to go and raise funds on GoFundMe pages or ask their mom and dad to help and things like that, right?
Yeah.
Um,
Mate,
yeah.
just on that, I know one person whose partner had ovarian cancer, and that was a very, very traumatic time for the whole family. And I remember them saying to me they couldn't think, they didn't know what to do. Their whole life was pretty much collapsing before their very eyes. Now, the insurance product that they picked up was a very good insurance product. I'm not sure if it's still being offered today or not, but ultimately they had it tested. They could see that there was cancer there, and then the insurance kicked in. Again, you need to get advice for your unique circumstances. Insurance got kicked in. It continued to pay her for several years while she couldn't work, and she was getting treatments. And touch wood, fingers crossed, by the grace of God, she was okay, and the family is now okay. But that again, had insurance not kicked in, I could only imagine. I mean, the potential of potentially losing your partner and your whole life sort of crumbling before your very eyes. It's very, very serious and a very, very stressful and traumatic period of time. So definitely insurance kicks in. It can really, really help and support the family, and it can help you to continue to work, because again, the fact that this thing is weighing on your mind can prevent you from working, can prevent you from concentrating, and even if you do work, it can, again, cause mistakes while you're working because it's just continuously eating at you, right? Mate, over to you again if you've got any more stories.
Yeah, look, I mean, talking about different scenarios. I mean, how many? I mean, I've heard so many times, not at work, but just in general life. I mean, friends and family and whatnot, where they had chosen not to pay insurance
Mm.
because it's a bit expensive, and all of a sudden the car's been stolen, right? And now they get nothing from it, or they find the car a few months later and it's trashed, and they can't get anything for it. So there's multiple scenarios where people have chosen not to pay for their car insurance. So again, like for a few dollars every week, it's something they can have. There's been businesses that I know of that have cut corners. Yes, they have the basic cover, but not enough to cover off, in a robust way. Again, they hadn't gone and got that specialized advice from a business insurance specialist. They've just, quickly got something in place, something basic, come to it when they really need it the most. Yeah, it's not great. From back in the day, from a lending perspective, when we used to look at business turnover over the last, or profit over the last sort of couple of years, we'll see that the previous year was, not that great at all. And, it's sort of picked up again, and, we can find a way to lend to that. But when we ask the question, hey, what happened in that year? And there was some sort of scenario behind it where the director was sick from some sort of illness, or family member was sick, so the director had to take time off work and things like that. So yeah, to your point, I mean, it's very, very important to put a risk mitigation in place for any scenario that people are going through. Not like getting into something. You want to make sure that you can stay in that something as well. So whether it's a car, the home, the business, yes, it's important to get into it, but we've got to find a way to keep you in there as well till you pay it off, I guess.
Yep, mate, with the cost of petrol and general cost of living these days, mate, I feel like hiring out like maybe getting a horse or a donkey and getting some insurance on those animals, mate. I reckon it'll work out cheaper. Um,
Yeah, yeah.
that's before you factor in the vet bills, I reckon.
Yeah,
Anyway,
yeah, yeah.
moving on. It's not that funny, but anyway, moving on. So, what are we going to talk about? We're going to talk about health insurance,
Yeah. Look,
income
I thought,
protection. I'm just going to cover them quickly, right? And then we're
yeah,
going to start delving into them. So, health insurance, income protection, life insurance, business insurance, and car insurance. Just covering off very quickly, briefly on those to give
yeah,
people a high level understanding. Again, this is general, it's not specific. You need to go see a professional to make sure it's tailored for your needs. I can't stress that enough, and I'm going to keep
yeah.
repeating it throughout this
That's good.
throughout this session. Okay, so health insurance. How does health insurance work?
Yeah, so everybody knows how the car insurance and home and contents and home insurance works, so we're not going to cover that. Health insurance, look, a lot of people think that health insurance means that it's only for the people that are earning a lot of money, right? It's not. It's for everybody. That feels like, okay, I need to have a backup plan just in case I do get sick. And it doesn't pay your everyday bills like rent and, um, living expenses. But what it does is when you go to a doctor, a specialized doctor, yes, you get your normal Medicare and everything. But if they then send you to a specialist, okay, now there's a big cost, right? Whereas with this medical insurance, there's a potential that you can get like 80% back. So different covers have different amounts that they give back. Generally, they'll set a goal for the year or a target for the year, whatever you want to call it. They'll say, okay, for physio you get 300, for chiro you get 300, for dentist you get $1,000 or whatever, and you can spend that amount at 80% of whatever the cost or 70% whatever the cost, right? So again, when you're going through something, it alleviates a little bit of that pain when you need it the most, right? And again, there's different covers. Some companies might say, okay, just take those, what they call the extras. And some companies will say, why don't you look at taking the hospitals plus the extras? So you can either have one or the other, or you can have both together. It's really up to you, right? Again, like here's a great example. I know somebody in my personal close sort of, I guess, vicinity in relationships where young and very healthy and everything was great. They didn't take insurance, but finally they thought, you know what, we just got to get something in place. I've got, a couple of kids now as well. They took it. 6 months later, they got diagnosed with a illness. Luckily, that thing was in place. And the amount of things that that person had to go through, like psych wards and, psychiatrists and, all the different doctors, it actually helped a fair bit. So yeah, that in a very brief way, that's what health insurance is for. And I think the next one you were thinking of talking about was income protection, was
Yeah,
it?
before we jump into income
Yeah, yeah.
protection, I think there's a little bit more to potentially just go over.
Mm-hmm.
And you touched on it, which is there's a waiting period, right?
Mm-hmm.
With some things like more complex surgeries, different types of surgeries, dental, whatnot, depending on the case, there's a waiting period sometimes of about 12 months. So if
Yeah,
you've got something that you need treated,
yeah,
you should ideally have the insurance. So take the insurance out as soon as
yeah.
possible. Again, it's just general, right? Take the insurance out, and then, God forbid, something was to happen, the insurance is there to protect you. Okay, so that's in terms of that one.
Yep.
You touched up also on wealthy and not wealthy needing to take out insurance. So we've got the public health system,
Mm-hmm.
which helps us, which covers us, but there's a long list. There's a long waiting list,
Mm-hmm.
depending on the treatment that you need to get.
Mm-hmm.
When you have private health insurance, you can potentially choose the doctor, you can choose the hospital where you get treated, you can choose when to get treated.
Mm-hmm.
So there's all these additional benefits. Now, some people might be happy to stay with the public treatments, right? Hospital. Some people might go towards the private, but where people think more and more about getting into the private is when their taxable income starts to get around the 90 as a single person and about 180 thereabouts. Don't quote me on this. I need to check the thresholds. This is where Medicare levy surcharge kicks in. So I think definitely if you are in that scenario, in that bracket, then you need to say, okay, well, I'm already paying an amount for Medicare levy surcharge. Why don't I check out if I go down the private health, private insurance path, would I be getting better benefits? Again, I have the ability to potentially go into hospital, choose when I get the treatment. So just a few more things on that. Shall we hop on to income protection?
I like the fact that you talked about the Medicare levy surcharge, mate. I've been doing like in the tax return phase. I don't do my own taxes, but I've never could get my head around that. So good for bringing it up.
Pleasure. All right, what next? Income protection.
Yes, yes, yes.
How does that work?
Look, with the income protection, again, I don't specialize in this space, and it's general advice only.
General advice only.
Yeah, my understanding is that there's two types. So one is like, let's just say I'm a very high level, very much sought after surgeon. So I have a very specific set of skills now, right? I'm a pilot. I have a very specific set of skills. I can actually insure for that I want insurance for that, right? Because if something happens to my hands and I can't be a surgeon anymore, I want to be covered for that. So there's that type of insurance, and then of course, people like myself, admin role, managerial role, or even anyone, really anyone that thinks, what happens if something happens to me and my income just stops, right? How am I going to pay my mortgage? How am I going to pay my rent? How am I going to keep sending my kids to school? I want to cover that. I've been in my current job for 12 months or whatever it may be. I've really got life now moving in a good rhythm. I'm saving to buy a house. I'm saving to do this. All that and more will start collapsing if something happens and I lose my job, right? So, yeah, again, in this space here, you really want to talk to a financial planner. They're the ones that are going to really talk to you about the positives and negatives. Then, even your accountant can, Mina can give you some advice around, okay, spending that much on income, what are the ways that we can, get some tax money back as well at the end of the year. So yeah, I'm a big believer in that income protection space. I've got it myself through my financial planner.
Yeah. Just be careful. Don't call them financial planners. They start getting offended. They're financial advisors.
Advisors, sorry,
Okay.
sorry. Okay, okay.
you, know,
If that's the
you know
thing,
how many
okay.
times I called someone? I think that might have been like a very old term. I've
Okay,
spoken to a few financial advisors, and I started with
okay,
financial planners. They're like advisors. Like,
okay.
okay, I'm sorry.
Does sound a
so,
bit sexier.
so that does sound a bit high up. Does sound
Yeah.
pretty cool. Okay, so the in terms of the income protection, yep, like you mentioned, yep, I agree. There's two levels. If you're a surgeon, you want to protect that specific ability to be paid for that particular service that you provide.
Mm,
Because as general insurance, they'll say to you, okay, well, you can go out and just find any other job,
mm,
right? That's one type of cover. The other cover is, no, if you can't go out and find a job as a surgeon, then we
mm,
will pay you a surgeon salary, obviously a
mm.
percentage of that. It's generally about 80 to 85 thereabouts. Okay, again,
Correct. Yeah.
general information only.
Yeah.
Okay, definitely the area of a financial advisor.
Advisor.
In
Yep.
terms of tax returns, this is actually one of the first things I look at, and I see, okay, the person's earning good money. Doesn't matter, they're earning money, right? And they've
Mm,
got certain obligations, where they've got a family, or they've got a home loan, residential, as in they live in that home, or they've got an investment property. I want to make sure that they are protected. So if I don't see income protection, I ask them, was it missing from the statement? Did you not let me know that that expense was there? Or I'd speak to them about it and connect them with a financial advisor to make sure they're being looked after. I think it's very, very important because at the end of the day, if something happens to the tree, then the tree can't produce fruit. If the tree can't produce fruit, then
mm,
there's nothing that you can really do. You're going backwards very, very fast.
mm.
All right. So
Correct.
thanks for that. I appreciate that. What's next? Life insurance.
Yeah. In this space here, oh, my light's getting dim. I don't know why. In this light,
The
in
light the
this,
light is coming from you now, my friend.
that's it. It's radiating from me.
It's-
Look, life insurance is another one where I think, not I think, I mentioned to you before, there's numerous studies done where Australia actually has a problem with underinsurance, right? Because we are now with home loans getting bigger and bigger, interest rates, at a certain level, it's sort of stabilized, which is fantastic. But the property values are going up. The commercial property values are going up. The business values are going up. So the loan amounts are a lot higher, right? But unfortunately, a lot of customers are still thinking, "Oh, what I've got in my super might be enough," and they don't actually even know what's in there, right? So yeah, in the life insurance space, also again, please general advice only. Talk to a financial advisor. Um, there's multiple ways you can think of this. Do I want to cover a amount that covers all my debt, or do I want to cover an amount, take a cover to an amount that I'm comfortable for X amount of time period so I can, get through that time period till I sell my property or sell my business or whatever, right? So again, when it comes to life insurance, what we're talking about here is covering you, your life. Now, if you decide you want to get a policy with two people, you can cover yourself and your husband as well. Look, there might be other products out there that covers your whole family with the kids as well, because, we all see in on TV that, like a 7-year-old, child might be going through cancer or something like that, and then you have you as parents want to be there, so you want to quit your job and look after that person. So, you know, again, there might be specialized insurances out there through a financial advisor, right? So yeah, we are talking about covering your life so that if something happens to you, your partner can decide to take time off work and stay at home and look after you and the kids. If you completely pass away, you want to have money going into the bank account so that your partner can, grieve for you and grieve for what's happened instead of having to worry about money as well. Right. There's so many cases that, I've read on in the newspaper or, on social media where, in GoFundMe pages, right? Where, a very high net worth person had so much debt and got three, four properties, everything's going fantastic. Middle 40s, got a heart attack, passed away, right? Now the partner, haven't been ingrained in what's happening in the financial side of things in the family, and all of a sudden finds out, oh my God, there's $5 million worth of debt and three properties, and now we've got this much owing in this property because we used equity from this property to buy that property, and all of a sudden they're having to sell their own occupied property and other things as well, right? So, yeah, this is all talking about having an understanding around, yes, there's a very important to have wealth creation, but all that wealth creation really hangs on whoever's driving that income. Like you said, the tree, you are the tree. So, yeah, hopefully I've sort of explained that. But generally, it covers for you passing away or having a critical illness where the doctor says, listen, you've got 9 months to live, right? That's one component in certain products. Another product might provide you with a trauma. Trauma is so many different things like heart attacks, Alzheimer's, dementia, cancers, like having a car crash and losing a limb, traumatic sort of events. Then there's a different component with different products called TPD, so total permanent disability. Um, I mean, I've been reading for on myself again, thinking, you know what? Because I'm in an admin type of role, if I lose my leg, because I still get to keep my job, is that TPD? Do you know what I mean? Like, it's an interesting conversation, right? So it depends on which insurer, how they sort of look at that, right? And again, if I get to keep my job, do I get income protection? Going back to that previous conversation, right? Because I get to keep my job, right? But do I want some money to be able to take time off and deal with this thing that I'm going through? You know what I mean? Like, am I happy to pay X amount of dollars per month so that if this happens, I can actually take the time off and go, you know what? I want 1 year's worth of no pay, no work because I've got X amount of money in my bank account and I can just deal with this problem that I got now.
Yeah.
Right. Um, Then yeah, the third one is some products also have this like if you break a bone, if you're a klutz and you fall over, right? We see, I mean, you know me, watch a lot of gym memes and I see so many gym like accidents, fails, and people are
It's
breaking bones and stuff.
it's highly
Uh,
likely after leg day.
After like, right? I love the way you simplify things.
The worst.
But But I hope I didn't confuse it too much. But there's different components with different insurance products. You need to talk to a financial advisor and work out, okay, do I want to go with the whole bells and whistles and spend X amount of dollars? But based on my age, do I want to only spend with this and sort of tier up? Yeah, all that kind of stuff. Does that kind of make sort of sense?
Yeah, I just want to clarify something. So, based on what you're telling me, it sounds like some aspects of it might kick in while you are alive, and
Hmm.
other aspects
Yeah.
when you've moved on, when you've passed
Hmm.
on. Is that
Correct. Yeah.
correct? Yeah.
Correct. Yeah. Yeah. Yeah.
Okay.
So anyone that's listening, my first thing to you is, you know what? Contact your superannuation company. Get them to send you your actual cover. Get them to send you where is your money invested. A lot of us don't know until we start doing it. Just one phone call will really help you understand, okay, what have I actually got now?
Hmm.
All right. You might not have a property, but you still have to pay rent. You still have to, have your living expenses paid for if something happens to you. So think about it from that perspective. If something happens to you, you might have to buy wheelchairs, you might have to buy a specific bed, you might have to, go to a specific sort of home for ongoing care. Yes, the government has some really good programs in place like the NDIS, but to get that, the time that you're waiting and the things that you're going through is a lot. So, you want to think about all those kind of scenarios, and put something in place so that you don't have to go through it if it happens. So, and the other thing is, insurance is something that all of us will end up not end up, should be paying, but shouldn't want to claim. Because if you're going to claim, that means something's happened to us, right? So it's one of those weird products that a lot of people should be paying, but not actually wanting to claim, right? So again, general advice here.
Yeah, it's like having insurance on your phone. You crack the screen, the insurance comes in and protects you. Ideally, you don't want to crack your screen because if you crack your screen, there's all that downtime. Obviously, this is more related
Yeah.
to, again, the actual tree and the fruit. It's related to our lives and helping us look after our loved ones, look after the various obligations and commitments that we've got going on.
Correct.
Um, Another aspect I think in relation to that is some people move from a retail, their normal superannuation fund, to a self-managed superannuation fund.
Mm.
It's very important before you roll over all the funds from the retail industry fund to a self-managed superannuation fund that you review your insurance with a financial advisor to ensure that you're not cancelling any really, really good insurance policies because you might not be able to get those in your self-managed superannuation. Some of these insurance policies just don't exist anymore. So you might be sitting on a gold mine of an insurance policy and unwittingly, because you're diverting funds from one environment to another environment and not getting the advice, always get the advice. It's a lot cheaper to pay for the advice than to come back and pay for the lost opportunity cost of making that mistake. So another very important consideration.
Yep.
Beautiful. Now, moving on to business insurance. What type of insurance do businesses have? I think we're going to talk
Again,
about, I think we're going to talk about three main ones.
yeah, let's cover the three main ones that you
Yeah.
wrote down
Yeah.
because
So
there's
there's
so
there's
many.
there's quite a few. We'll give you a little bit of a. I got a bit of a list here. Okay, but there's things like public liability insurance, professional indemnity insurance, business insurance, PAC, workers' compensation insurance, commercial property insurance, cybersecurity. It's a big one these days, especially when the big players are getting infiltrated by cybersecurity attacks and scams. And I think it's called phishing or phishing.
Phishing, yeah.
Phishing.
Yep.
That's a huge one. That's like
Yeah.
someone sending you a link on Facebook saying, "Oh, to read this article, log into Facebook." They get your information, then they access all your contacts, and it just continues to build from there. But it's more sophisticated than that, and it's a lot more malicious because then they start to get things like they start to impersonate you effectively. They can conduct identity
Correct. Yeah.
theft. Okay, but again, we're going to focus on first and foremost what's public liability insurance.
So basically, wherever you're going to have customers coming through and it's an open forum. So, you and I went to the fitness expo a little while ago, right? So whoever the event organizer is, they would have had to have public liability as for the whole venue. And then the individual store owners would have had to have their own professional indemnity insurance for anything that's happening in their little square, right?
Mm.
So hopefully that gives you a bit of an understanding of the two different things. Yeah.
Yeah. So ultimately, it protects you from damage something associated with you might have
Yeah.
caused to the general public, effectively.
Customer, contractor, even your own staff, right? Then they're coming in after hours or something to set up something. You know, yeah, going back to the customers, they're walking around, slip and fall, they might try to sue the venue for
Yeah,
what's happening.
yeah. Just have some
Um,
cameras around because some customers might intentionally try to slip and fall. It's just
yeah,
balancing various things out,
yeah,
and I'm pretty sure it'll reduce your public liability insurance policy to
yeah,
general
yeah,
advice only. General
yeah,
advice only.
correct, correct. Contractors, when they're putting the event together and moving things around, somebody's turning around with a ladder and knocks the other person over the head, things like that. Yeah, yeah,
Okay, so ultimately it tries to revert the person back before their injury state. That's what
yeah,
public liability. Yeah. Okay.
correct. Yeah, yeah, yeah,
Perfect. Now, if you don't have public liability insurance, although you might be operating in a company or a family trust or whatnot, and you've got asset protection, things like public liability insurance will help you protect your brand name.
yeah,
Yeah, because the brand name again is a very important asset. We touched up on professional indemnity insurance. Professional indemnity insurance is more when you provide advice or you're giving something, right?
yeah,
And there was an oversight, quality control process. As human beings,
yeah.
you need to have that professional indemnity insurance to make sure
Yeah,
you look after
correct.
your clients.
Correct. Yeah. So the financial advisors, mortgage brokers, look, they have a very good, robust process in internally. Then they also have an internal dispute resolution. So if a customer has a problem, they can take it up with that internal team. Most of the time, it's the director themselves. If that's not good enough, then the director will give them the information on how to bring it up with AFCA,
Hmm.
Australian Financial Complaints Authority.
Hmm.
And then if that from there onwards, I guess, deemed that yes, there's a claim here, that's where the professional indemnity insurance might kick in and say, okay, well, we can see that this was a um, there was no wrongdoing by yourself, but it was deemed this way because of XYZ reason. So we believe we can come in and actually cover this claim.
Yeah, and it applies to various industries, whether
Yeah,
it's medical, real estate, accounting, legal,
yeah,
financial.
correct.
It's mainly geared towards people who provide a service
Service,
rather
yeah,
than a product, right? But even with some products, it might cross both of those. So again, you need to get advice from a
yeah,
commercial insurance broker so they can step you through and let you know exactly what product is right for you. Speak to an insurance broker.
yep.
So that's in terms of public liability. What about work cover? And there's something I'm going to add in relation to work cover that some people miss. A lot of people actually miss. But
Okay.
over to you first.
Look, again, with different size of business, right? So you might have a work cover situation where it's only the director plus one person. There could be an operation where it's a medium-sized business with 10 people versus a big business, right? So there's different levels of experience that you would need to talk through all those different circumstances, scenarios. You have to have incident reports and accident reports and everything in place, what needs to go in place. Otherwise, some of these insurances might actually not kick in and actually pay. So this is why you need that real guidance and advice piece to really go through, okay, this is my business. What do I need? So
Yeah, agree. It's very important to have those policy systems and procedures in place
mm,
to show that you weren't negligent.
yeah,
This is even more important when you're on a construction site
mm,
because you can end up in jail for causing a
yeah,
fatality for not having things like the proper guardrails in
yeah,
place. So you've got to document this stuff. And I know a particular person who actually does video content, like a learning management system that
mm,
covers all those types of things. So again, touch wood, something were to happen, you could show that you were not negligent
mm,
in applying these things. You mentioned a director and an employee.
mm,
Work cover is actually needed if you're a director. A lot of people don't understand that once you become a director, it's a separate legal entity. The company or the trust is a separate legal entity, right? And it's effectively employing you. Some people actually forget to take out work cover, thinking that, oh, me and the organization are one,
mm,
but
mm,
they're not. If you're a director and you're working for your organization, which you would be, you need to take out work cover. Speak to the insurance agencies, Allianz and whatnot,
Mm.
regarding those things, and make sure you got the right cover in place.
And especially if a point for the ones that have family members working, then thinking, oh, they're my family, nothing's gonna go wrong, please. These are the ones that go wrong the first, right?
Love
Uh,
that.
yeah, where as soon as there's a bit of a issue with the family relationship not working out through the business, just seen so many ones that go worse than when it's just an employee and a business operation manager or business owner working together. It actually gets worse than the normal work situations.
Yeah, yeah, yeah. Like I said, you don't need it unless you actually need it, right?
Mm.
So best to get it. Have that conversation early on and make sure you're protected. Any
Yeah.
other final comments, Mr. Anthony?
No, when I say final comments, I think it's until you're in this space and it happens to somebody, unless it happens to you or somebody around you, you don't see the value in this unless you talk to somebody, talk to an advisor, and they sort of take you through these scenarios, right? So if anything that you take out of this last half an hour chit chat, number one, contact your superannuation company and find out exactly what you've got. Again, not advice, just so that you can have a peace of mind of actually exactly what you've got. Doesn't matter how old you are. If you have had a PAYG job where you know some super was paid, contact that super company and find it. If you don't know where to start, contact Mina. Mina, all accountant can actually round up where all your super is as well. And then the next one is put value around that backup plan, whether it's a car, a house, your body, your business. Put value onto not just getting that into good shape, into a good space, good wealth accumulation, but also how are we just going to stay there and keep accumulating and accumulating, and what risks are we going to put in place to be able to mitigate that. So that's my final thought.
Awesome. Thank you very, very much for your time. Definitely, if you're listening to this, reach out to either Anthony and myself, and we'll look at exactly what's going on, and we'll connect you with the right professionals from a tax perspective, from an insurance perspective, from potentially a lending perspective. Reach out to us. We've been in the industry for quite some time and love to work with other professionals to really help you out and your family out. So don't hesitate. Reach out. A simple conversation can help you so much down the line. So, Anthony, once again, thank you very much, mate. We appreciate you and look forward to the next chat.
Thanks for having me, Mina. Enjoy.
See you, mate. Thank you.